The USA has returned to international politics. They have returned to multilateral institutions.
I don't believe that we're at risk of hyperinflation.
I'm especially pleased that we showed the nation that we can come together as Democrats and Republicans to commemorate this day.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Investors unwind reflation bets with U.S. tech shares rallying. The Treasury curve sees its biggest two-day flattening since March 2020. The commodities rout continues. Gold heads for its biggest weekly loss in more than a year as grains plunge the most in more than a decade. And Joe Biden makes Juneteenth into a national holiday commemorating the end of slavery in the U.S. Most government workers will get the day off, but it's a different story on Wall Street. So good morning, everyone. Happy Friday. Let's get straight to our top market story with our Danny Berger. Danny, good morning and happy Friday to you. So we've seen some pretty significant movement in the yield curve as a reaction to the Fed.
Yeah, it is extremely significant. As you said, that great superlative, biggest two-day flattening of the curve since March 2020. And look, the market's here reacting to a hawkish surprise. I have heard from analysts saying, is this the market possibly sniffing out a policy error given how steep that decline was in the yield curve when you have 30-year yields plunging as abruptly as they did? But one thing to keep in mind here is it does look like positioning had been really far off heading into this meeting. A day before the FOMC decision, the day before we had heard from them, JP Morgan put out a survey of its clients saying that they were the most short treasuries since 2005. So all of a sudden, we're dealing with a different reactionary function from the Fed, that they are going to be looking at inflation, trying to combat it. And a lot of investors, it seems, were just caught on the wrong side of this. So that's why we have seen this abrupt positioning. Now, things certainly do look more calm this morning. The big move has been to the upside for the NASDAQ. Again, it's that ability to go back in and buy duration once again. So we are seeing those growth stocks outperform cyclicals as it stands.
Danny, commodities under pressure again. How much of this has to do with the Fed?
It certainly has kind of been the last kick in the commodity sector to see them starting to decline. We've seen a few commodities completely wipe out their 2021 gains, which of course is significant given this commodity boom that had been predicted by some and the appreciation of prices that we saw thereafter. So not only do you have a hawkish Fed, which means a stronger dollar, which of course damages the commodity rally. More rate hikes are bad for commodities too, but you now add that to a picture of you have China, the biggest buyer of commodities, trying to rein in prices, and that, of course, matters. Not to mention that the weather looks more fair, so you've seen things like soybean futures plunge as well. So it's just a really tough environment if you're a commodity bull at the moment, especially for something like gold, an inflation hedge, which just doesn't seem to have a ton of demand at the moment, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on the markets. Now, to talk more about the markets and some of the reflation trade, some of the swings we saw over the last 48 hours is Francesco Sandrini. He's Amundi Senior Multi-Asset Strategist. Francesco, thank you so much for joining us right here on Bloomberg. First of all, when you look at the reflation trade, what we heard from the Fed, how much more unwinding could we see?
We could see unwinding for sure, because the positioning, as was already said, was quite important. I think that we are entering the summer, a very misty summer, in which no one seems to have the compass about what's going on. And I think the proof of that is also the great confusion at the level of sectors in the equity space, because we have seen a reduction of prices in sectors like the materials, but at the same time, until yesterday, nothing was happening at the level of the energy. So there are multiple transitions at play at the level of inflation, at the level of central bank reaction function. And I think it is very fair to expect that this deleveraging in terms of inflation position will continue for a while. I think it is very risky to follow the market at this level. It's quite important to maintain the outlook that we had until a couple of weeks ago.
So, Francesco, where do you see the most value right now? If we're going to see a broader correction, where do you want to be invested in?
I think it is still extremely important to be invested in risky assets. So if you notice yesterday, all the credit markets have been a little changed. So it means that there is still a search for carry trades. So we are looking to subordinated financials, we are looking to high yield markets, and the same investment grade corporate bonds are looking quite safe. It's quite important, though, to stay constructive on the equity markets with some distinguo. Of course, the reaction function of the Federal Reserve that we learned on Wednesday poses some threats for the emerging market. We tend to prefer, for example, Europe. Europe is a little delaying the reopening trade because of the vaccine dynamics. And because of that, we believe that is more interesting, also related to the difference in terms of monetary stance from the European central banks in comparison to the Federal Reserve. Then Europe is also cheap from a lot of metrics, including Schiller price earnings, for example.
Francesco, we'll come back, and I also want to speak to you a little bit more about Germany. We had a wonderful interview with Armin Laschet, of course, a possible successor to Angela Merkel. When you look, Francesco, at some of the bigger forces at play, so if the U.S., if there's a danger that it overheats, which is why the Fed kind of repriced some of the market expectations, does that get also filtered through other central banks? So could we have, a huge impact on some of the emerging markets, or are we underestimating the impact actually this could have in the summer months?
Yeah, we have always to bear in mind that the inflation dynamics that are hitting the Western economies, the developed economies, are profoundly different from the one that are hitting the emerging markets. In emerging markets, the inflation comes primarily from food inflation, from energy, and to a lot of extent, this wave of heating inflation over the last couple of weeks have been reducing. But of course, a strengthening dollar poses some challenges for emerging markets. And because of that, I think that we have to look to the emerging markets with a little of a cautious stance. Regarding the transmission of the US inflation wave that at the moment is seen to be primarily transitory in the short term to the other large economies like the Euro area or even UK, I think that is very worth to stress that we see a delayed effect. While we expect the US inflation peaking in June, at the end of June, beginning of July, I think that we are going to see this effect in Europe only towards the end of the year because of the delayed opening of the economies. And because of that, we think that it won't pose an harm to the central bank's behavior.
Francesco, thank you so much. Francesco Sandrini there of Amundi stays with us. Now, up next, after this week's Fed meeting, investors are unwinding some of this year's most dominant reflation trades. We'll discuss all of that next. We'll also look longer term at some of the pitfalls out there. Maybe we'll touch on cryptocurrencies. Maybe SPACs is also one of the themes that we'll talk about as well. This is Bloomberg.
If you look around the world, central banks are going to struggle as to when this virus is behind them, because at the end of the day is the determinant here. So if you think about India, think about what they went through over the last several weeks. Think about the UK delaying the full reopening because of the variants. That's the variant question. You think about the US, vaccines through half the population, you can see it's pretty open, and the question is, will the variants affect us? So pay attention to the vaccine path.
Well, that was the Bank of America Chief Executive Brian Moynihan. They're voicing his concern over how central banks managed the COVID crisis. Now, this comes after the Federal Reserve unexpectedly pushed forward its rate hike path at this week's meeting. Now, that's caused investors to unwind some of this year's most dominant reflation trades. And we've seen the biggest two-day narrowing of the Treasury yield curve since March 2020. Well, Francesco Sandrini of Amundi is still with us. Francesco, we were talking a little bit about some of the correction and where you want to be invested in. What do you do with some of the commodities right now? So if you look at, copper is different to cobalt, and that's, of course, very different to some of the soybeans. Where do you see any value?
I think that at the time being, perhaps value will be found still in industrial metals, because we will know more in the future regarding the infrastructure plan, and the demand may be supported. Of course, like you said before, we have to expect further deleveraging for what's going on in China, the control on the state-owned enterprise, and the gentle pressure to reduce speculative positions. So in the commodity space, every segment seems to have different idiosyncratic forces. On the food component, agriculture component, the correction was mentioned before. But I think if I have to find a segment, perhaps the industrial metals are the one that looking ahead because of the infrastructure plan will be more supported.
Francesco, what do you do with some of the emerging markets? I mean, we touched on emerging markets in general, but how difficult is it to correlate how an emerging market does compared to, some of the variants of the COVID crisis? Like, how does vaccination filter into your thinking?
Of course, so far we have been considering a lot of emerging markets affected by idiosyncratic stories. That was the case, for example, of India. Normally, when looking to emerging markets in our business, we are looking naturally to Asia for what concerns the equity market. We are looking more naturally to Latin America for what concerns the fixed income markets, because for the reason of yields and spreads. So to the first, I think that we are looking at the moment to China. China is not recording at the moment brilliant macroeconomic performance, and there are big question marks that perhaps are related to the recovery after the pandemic. Numbers like fixed investment, retail sales are not surprising on the upside, rather they're weak. And this is to some extent something that has induced us to have brakes on regarding emerging markets in the short term. And this is something that, in our opinion, will continue for a while. So we're looking to emerging markets at the moment, definitely with more interest on the fixed income side and on the equity side. And regarding fixed income, China is definitely quite interesting related to the carry opportunities and the strengthening of the currency.
Francesco, do you worry about liquidity in the markets?
But so far, liquidity has not been an issue, and until Wednesday, when we heard about the possibility to anticipate a tapering exercise, I think that this has not been a big issue. Of course, we have to be extremely vigilant regarding liquidity because we are in a completely different framework with the leveraging from investment banks, and the next liquidity crisis will be a kind of new uncharted territory for everyone. Because of that, in Amundi, we have quite important liquidity contingent measures in place. But at the moment, if the question is over the next couple of months, I'm still a little relaxed.
Okay, Francesco, in the next couple of months, would you be, more or less inclined also to look at cryptocurrency? I don't know how that factors into your investment decisions or how many questions you get about that.
We have a lot of questions. I think with every investor we are speaking, cryptocurrency is one of the questions, of course. We deem that this is not something interesting for us to invest or to propose at the moment, because still there is a variability, volatility embedded in the cryptocurrencies that we are not still fully in the position to understand. There are experiments from central banks to try to peg their currency to cryptocurrencies, but we think that there are more provocations in the market or willingness to disengage from the dollar than anything else. So at the moment, for us, cryptocurrency is not something that we are looking proactively as an asset class, because we deem that the understanding of that from the fundamental point of view is still rather limited. You can also imagine the progress on technology. Cryptocurrency is very tight with the whole idea of blockchain, and I think that the quantic computing in the future will pose, in our view, some challenges to the cryptocurrency as we have seen so far. So we prefer at the moment to stay quite on the side on the cryptocurrencies.
Francesco, thanks so much. Francesco Sandrini there of Amundi stays with us. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gearns. Hi, Leanne.
Hi, Francine. The UK has recorded the most coronavirus cases in a day since mid-February. This comes amid the warning the current wave, driven by the highly transmissible Delta variant, may still be weeks from peaking. More than 11,000 new infections were reported yesterday. Now, President Joe Biden has signed a bill making Juneteenth a federal holiday to mark the end of slavery in the US. Most government employees will be granted paid leave today. Juneteenth commemorates Jun.19, 1865, when Union soldiers brought news of freedom to enslaved people in Galveston, Texas.
I'm especially pleased that we showed the nation that we can come together as Democrats and Republicans to commemorate this day with an overwhelming bipartisan support of the Congress. I hope this is the beginning of a change in the way we deal with one another.
And the nuclear deal hangs in the balance as people in Iran are heading to the polls today. The presidential election is expected to see a hardline conservative replace the more moderate Hassan Rouhani. That could complicate efforts to restore a landmark nuclear accord that has major implications for Middle East security and oil markets. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thanks so much, Leanne. Now, coming up, Armin Laschet, the front-runner to succeed Angela Merkel as Chancellor, outlines plans for a more assertive Germany after September's election. We'll get more on that next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Armin Laschet, the front-runner to succeed Angela Merkel as Chancellor, called for the reinstatement of EU budget rules once the pandemic is over. His position on the EU budget criteria sends a signal that Germany may return to its role as a bloc's fiscal watchdog. Well, Laschet has insisted that Russian gas would also flow through the controversial Nord Stream 2 pipeline. He spoke to Reto Grigori. He is Bloomberg's deputy editor-in-chief.
I completely share the position of the Chancellor here. She said in the Munich Security Conference that you can't tell if the molecule of gas is being transported by land or by sea. The difference is the geopolitical security of Ukraine, and we have to pay attention to that. The USA has returned to international politics. They have returned to multilateral institutions, and it is therefore a good thing because all the challenges that face us can only be dealt with multilaterally. There are already reasons to watch China closely, also to stand up to China, but nevertheless, China is, of course, also a partner in economic relations. And to find the right balance here is the task for the coming years. When the crisis is over, when the global economic effects are no longer there, German and also European policy has to come back to a policy of stability, just as was agreed in Maastricht.
Well, let's discuss Germany and Europe in more detail with Francesco Sandrini of Amundi, who's still with us. Francesco, when you look at some of the big political events that we've seen over the last couple of days, then with Angela Merkel, of course, stepping down after many years in power, does that, directly have an impact on how Europe will be run? Does it have an impact, of course, on some of the fiscal rules and therefore the, the market, or is it a little bit removed to what you look at day in, day out?
No, they will for sure. Also, listening to the interview to Laschet, I think that it's quite important to acknowledge that such a moderate profile for the CDU in Germany is quite important because the priority number one has been the one to reduce the push of the AfD, so the ultra-right parties. And I think that the results that we saw in Saxony-Anhalt are definitely boding well in this direction. Then, of course, to create a government coalition, it will be needed the support of the Greens. And that's very important where the two forces will be balanced. So it's quite important to acknowledge that the restoring of the fiscal discipline after the big spending in terms of the central banks and the fiscal expansion that is undergoing at the moment to fight the pandemic, I'm expecting this to come from the CDU. It's equally important that perhaps on the other side, the Green parties will continue to push for fiscal expansion. And I think that this balance will not deliver to us a Germany that will be more conservative than before, but rather a Germany that will be ready to lead the transformation in Europe. And I think that in this way, also the collaboration with Mario Draghi in Italy, people that to some extent now is leading the country, but at the same time has a huge experience in dealing with the European organization will be extremely important. We are expecting much more traction in Europe moving forward.
Francesco, very quickly, how do you view Brexit? So 6 months on, does it give you opportunities to get back in the UK assets?
Oh, we are looking to UK extremely interested, of course, because the growth is not bad, the valuations are good, and to some extent we have to factor in the fact that the index is quite exposed also to cyclical themes. So we have to look to the FTSE, having in mind that this is a cyclical value trade primarily, but at the same time it's quite interesting from the valuation point of view. Of course, at the moment what's going on in terms of new spread of COVID crisis doesn't help, but we are looking to this investment case extremely interested.
Francesco, thanks so much. Francesco Sandrini there, Amundi Senior Multi-Asset Strategist. Now, coming up, after nearly record rally in 2021, many commodities are actually wiping out their entire gains for the year or are close to doing so. Grains, metals, sugar, and even lumber are all faltering. So we'll have plenty more details next. We look, of course, at the reflation trade. We'll look at exactly what's been happening in terms of reflation thinking and why futures currently are drifting. Then a reminder, I think France is reopening with some luxury hotels reopening from today. We spoke to people on the ground saying it's the busiest they've ever been. What that means for the future is one of the big questions also for vaccinations. This is Bloomberg. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, after a near record rally in 2021, many commodities are wiping out their entire gains for the year or are close to doing so. Despite the talk of a commodities boom or a new super cycle, markets are only managing to eke out a small rise after fielding substantial losses. Grains, metals, sugar, and even lumber are faltering on everything from fair weather to this week's Fed meeting. Well, joining us now is Eddie van der Walt, a Bloomberg MLive editor who always makes the markets interesting. But Eddie, you don't need to do anything today because actually they're interesting by themselves. Commodities touted as a key part of the reflation trade are definitely on the move.
Absolutely. I think, we've had a lot of people talking about commodities, A, as a driver of inflation, and B, as a hedge against inflation. And I think that view is just being damaged at the moment. And one of the key reasons is that as we see a stronger dollar-priced commodities will come under pressure. So this is something that we're seeing feed through, and it's equally spread out across the whole of the commodity space.
So what does it exactly mean? The commodity complex is obviously diverse, right? So metals like gold being driven by very different fundamentals than oil. What raw materials are likely to be the winners and losers?
I think that's exactly the key here, Francine. I think you cannot play commodities as a basket at the moment. I think there are so many different drivers. I think gold is probably the most at risk from that rise in the dollar, if indeed we see one over the coming months as the Fed, takes on that slightly more bullish stance. But at the same time, commodities like oil, there's still a substantial chance that OPEC and its partners start increasing production. On the other hand, copper, I think the outlook for copper long term is still very, very strong. On the idea of an EV push to EVs and more electric vehicles and so on. So I think those are the key themes. And of the commodity space, I think copper is still my absolute favorite.
Eddie, thanks so much, as always, for your wisdom and insight. Eddie van der Walt, there, Bloomberg's MLive editor, joining us now. Now, President Joe Biden has signed a bill making Juneteenth a federal holiday. It marks the end of slavery in the U.S., commemorating June 19th, 1865, when Union soldiers brought news of freedom to Galveston, Texas. Most government employees will be granted paid leave today. Biden called it a profound occasion, but said that the holiday should also be used to focus on America's continued struggle towards racial equality.
By making Juneteenth a federal holiday, all Americans can feel the power of this day and learn from our history and celebrate progress and grapple with the distance we've come, but the distance we have to travel, Jim. I said a few weeks ago, the truth is, it's simply not enough just to commemorate Juneteenth. After all, the emancipation of enslaved Black Americans didn't mark the end of America's work to deliver on the promise of equality. It only marked the beginning. To honor the true meaning of Juneteenth, we have to continue toward that promise, because we've not gotten there yet.
Well, joining us now for more is Kathleen Hunter, our DC Morning editor. Kathleen, so why has the movement to make Juneteenth a holiday made it over the line, finally?
Well, here we are, Francine, a full year after George Floyd's death. Certainly the last time that Democrats were in control of both the White House and Congress was in the first 2 years of Obama's administration, so more than a decade ago. And so I think we've really seen, while this was about...
I think we've just lost, actually, our Kathleen Hunter. I don't know whether we have a problem on the line. I think it's probably this, but it was certainly the arrival of the holiday into law was quite abrupt, and so it's interesting to see also how some of the companies, especially on Wall Street, are managing. We'll get back to Kathleen Hunter as soon as we get a cleaner line, and we'll deep dive into this very important issue. Now, up next, we speak to the man in charge of luxury watchmaker Tag Heuer. How can traditional brands compete with the upsurge in smartwatches? Frédéric Arnault joins us shortly. And if you have any questions for him, IB plus TV Go. This is Bloomberg.
We are setting ourselves these kind of very clear targets. We are making external commitments. We are investigating, and we shared that externally. We're investigating how we can link this to executive remuneration, make this part of our kind of bonus targets. We're starting and have been starting to make this part of our engagement with suppliers in terms of the kind of specs and conditions that we set. And I can imagine that at some point down the line, if you have suppliers that really move along and decarbonize, that you will start favorizing them over those that simply don't move fast enough on this. Because again, we have made that commitment of fully decarbonization by 2040, so we will have to. I think it's too early for that. It's really about engaging, it's about the dialogue, it's about learning together and all pushing in that same direction. But I'm hopeful and confident in that regard, and you see that fast acceleration in awareness as well as commitment happening all around us. And leading up to COP26 later in the year, I think you're going to see more rather than less of it.
Heineken Chief Executive there, Adolphe van der Brink, talking to Bloomberg there about how the company actually plans to reach its 2040 net zero emissions goal. Now, for more on that interview and on the topic of climate change, don't miss Bloomberg TV, Bloomberg Green on TV and Quick Take every weekend. Now, what can traditional watchmakers do to compete in the era of smartwatches? Well, Tag Heuer is one of those iconic brands that is betting big on these wrist computers. Though the company's boss says the mechanical timepieces are not in direct competition with smartwatches, Tag Heuer considers them one of the pillars for future growth. Well, joining us now to discuss Tag Heuer is the Chief Executive, Frédéric Arnault. Appointed Chief Executive in June last year, Frédéric is the latest among his siblings to occupy a senior position in the world's largest luxury conglomerate, LVMH. The Arnault family controls just under half of the company, which has greatly expanded under the Chief Executive, Bernard Arnault, and owns fashion labels such as Louis Vuitton and the champagne maker Moët Chandon. But now, here to discuss the future of watchmaking is Frédéric Arnault, the Chief Executive of Tag Heuer. Frédéric, welcome to Bloomberg. It's a great pleasure to actually speak to you and get your insight into this wonderful world of watches. How much are you expecting to grow Tag Heuer in the next couple of years? What are people buying? Do they want the smartwatches and the luxury watch, or they want one or the other?
Good morning. First of all, thank you very much for inviting me this morning. So it's a great question. And we started in the smartwatch world in 2015. And initially, it was a defensive move. What impact will this market have on traditional watches? Now, more than ever, we are convinced that traditional watches will keep strong desirability and have a bright future ahead. And we see smartwatches as a new business opportunity, and it's bringing new customers to the brand, and it's a growth driver for us. It's different customers. We engage on the long term with smartwatches, but it's also a way to engage for the brands, and eventually our smartwatch owners are also interested in purchasing a mechanical watch from us.
Frédéric, I think I was looking at some of the reports, and actually Tag Heuer ranked number 9 globally, I think for last year or the year before in terms of sales. So what's your ambition mid to long term? How much do you want to grow? How much bigger do you want to be? Or is it too big than too mass market?
The growth on traditional watch markets comes more from value than from volume. And it's true that if you look on the past 10 years at the exportation from Switzerland, the volume have been decreasing. But overall, the value has been increasing, and we're investing a lot ourselves also on the quality, perceived value, desirability of our icons to grow little by little through value on the traditional watch business. The smartwatch business is growing much more. And even in 2020, in a crisis year, it grew by over 20%, and even the leaders 30 to 40%. And we are seeing this dynamic also in our brands. So continuing to grow and solidify our position in the mechanical watch business, but complementing it with strong growth on the smartwatch business. That's the ambition.
Frédéric, so how much were sales actually in 2021 compared to 2019? I don't know whether there was a hiatus because of the pandemic and now we're back to normal, or it will take a little bit longer to readjust and readapt.
So the objective and the ambition we have for 2021 is to come back to levels of 2019. Of course, 2020 was a hit for the company. There was a demand shock with all the lockdowns throughout the world. There was a supply shock. And in the end, it's the supply shock that slowed down the business, because starting in July 2020, demand came back to very high levels, and people wanted to purchase, have mechanical watches. But we cannot be so reactive on the supply, because it's an industry. There's long lead times, and the products that were not purchased is because they were not produced. So the ambition for this year is to come back to the level of 2019. However, completely differently. The consumption is much more local. Of course, there was a high dependence on tourism, and right now we're not expecting tourism to come back this year. And much more digital, either through our e-commerce platforms, through distance selling, and with a greater share of the connected watch in our business.
Frédéric, where do you see the most demand coming from? So is it Asian customers that actually want to buy some of your products? Is it the US? Is it Europe? And how will that change in the next 3 to 4 years?
Actually, right now, the dynamic is very strong in many geographies. China, of course, has been very strong for the past year, since it came out of COVID. Some Asian countries, such as Japan, Korea, right now is a bit more difficult due to the situation, and we follow it very closely, of course. The United States are doing very well, and the demand is extremely strong there. Europe, we are performing as a brand very strongly on local clientele. English customers, French, German customers, and we focused all of our efforts and all of our teams to these clienteles.
Frédéric, what's your biggest concern, or what's your biggest challenge, I would say, in the next 12 months? So we hear about luxury products, or not having access to the right supply chains, or I don't know whether there are parts that you need to making a watch that are actually quite scarce, and whether that's your concern, or is it pricing?
So in terms of supply, we have a lot of internal production or strategic partnerships with suppliers where we can secure supply for the months to come. Now, the ambition is not necessarily to grow through volume. And in our industry, sometimes when we're a bit constrained, it's not too bad. It helps also building desirability for the brand. We launched a watch with 500, 1,000 units. The demand was much higher, but then people look for it, and you can even find a second-hand price which is higher than the retail price, and this on the longer term is positive. As in terms of the smartwatch business, we are constrained like the rest of the electronics industry. There is a supply tension on the chipsets that we are also that is also affecting us.
Frédéric, what does a smartwatch, a Tag Heuer smartwatch, actually look like? I've never seen one. Now I'm so intrigued. Does it have, I guess it doesn't have any noise. How different is it to some of your rivals?
So it's, of course, very different from a mechanical watch and very different from the rest of the smartwatch industry. One of our main differentiator is design. We invested on the silhouette, on the design of the case, taking some watchmaking codes, materials, fine materials such as stainless steel or titanium, a ceramic bezel. We invested a lot also on the software and the design on the watch faces, making sure there's different styles that go with the watch and versatility. Of course, interchangeability on the straps. So I am currently wearing one actually with one of our watch faces that really retakes some of the mechanical designs. Now, this is the differentiator, but we invest a lot also on the technology. Yeah. I believe it's very important that it works well, it brings value to the customers on a daily basis through some pillars, productivity being one of them. We invest a lot on the world of sports, and this is one of our differentiator. We have a leading experience in golf with 40,000 golf courses in the database and best-in-class features. We're also investing on running, cycling. We recently launched swimming as a new sport, and now more and more in the wellness and health space as well.
Frédéric, I know there was also quite a lot of sponsorship deals, and recently you did something with Naomi Osaka, which then decided to no longer play for health reasons, for mental health reasons, for a bit. What was your reaction actually to her announcement as a lead sponsor?
So we support our athletes in victories and also in moments of difficulty. And I think that's very important. Of course, we were very close to her to understand how she was doing. And we very rapidly communicated to show our support to Naomi. And we're looking forward for her to come back strong. And we believe she will very soon.
How do you choose your athletes? How much work and preparation and picking do you need to do?
So first of all, we have sports in which we are very present. One of them being motorsports. It's historic for the brands. Historically, Tag Heuer was manufacturing stopwatches, professional stopwatches, before going in the wristwatches territory, and entered wristwatches through chronograph and the notion of timekeeping. We also have some professional timing equipment for racing. And so it made a lot of sense to sponsor and being very strong in the motor racing world. And we are, I would say, the most authentic and legitimate watchmaker in this territory. We have a partnership with the Red Bull Racing in Formula One, the Formula E as a race, Porsche as a manufacturer, with which we entered a multi-year partnership recently. So there's territories like that. Then there's territories, sports of speed and precision, and some sports we enter through the connected watch, golf being one of them, and we have legitimacy through the product. And then sometimes there's icons. Tennis is not necessarily as a sport super important for us. It's more the figure of Naomi Osaka, we believe, was very interesting for the brand. She's young. She's already a champion. She's an icon, and she's very engaged, which we believe is increasingly important nowadays.
Frédéric, thank you so much for a wonderful conversation. Frédéric Arnault there, the Tag Heuer Chief Executive Officer. Now, Scottish fans travel south of the border to watch their national football team play against old rivals England in the Euros. That's later today. Up next, we discuss football and money. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the man charged with making sure that infrastructure and development projects are delivered on time for next year's World Cup is hopeful that vaccines will allow the tournament to be the first truly global celebration since the pandemic began. Well, speaking to Bloomberg's Simone Foxman at the Qatar Economic Forum, which is due to take place next week, Hassan Al-Thawadi also said his team is keeping close tabs on the Tokyo Olympics for lessons that can be learned.
As the vaccine becomes more and more available, as more and more people are vaccinated, as teams are vaccinated, we're hoping that it will be, and we're optimistic that it will be the first truly global celebration in Qatar in 2022.
Yeah, well, vaccinations, it sounds like, are going to be pretty much mandatory for those who can receive them, I suppose.
I mean, as of yet, obviously, every country's got its own restrictions, but I think it's a given from what we, from everything that we've seen. I'm not a medical expert in this, but it's a given that vaccinations today seem to be the solution towards overcoming COVID. That's what it's. And if you see other tournaments, for example, today, the Euros, for example, are playing as we speak right now. There's Copa America as well. The Common Ball in South America is being played right now as we're speaking, and in July there's the Gold Cup as well, and all of them have a form of COVID protocols being implemented.
Is there anything you're watching specifically from the Tokyo Olympics?
Our habit, our nature has been that, since we've won the right to host the World Cup in 2010, we've always learned from every tournament. But nothing in specifics, I mean, you're watching it, you'll see what happens. Well, I mean, absolutely. Well, to add, we've got people in the Euros right now, so we've got people spread throughout Europe right now looking at the Euro tournaments and looking at the COVID protocols that they have over there, learning from their operational experiences. We've got people that will be in North America as well, in the United States during the Gold Cup. We're learning, obviously, from South America and Brazil right now with Common Ball, and there's no doubts that we'll be looking towards Tokyo and learning from what they have.
Hassan Al-Thawadi there speaking to Simone Foxman. Don't miss our coverage of the Qatar Economic Forum. The 3-day virtual event will feature heads of state and top chief executives from around the world, and it kicks off on June 21st. Now, 2 official sponsors for the ongoing Euro 2020 have felt the viral ripples caused by simple gestures from stars of the world's most popular sport. Portugal's Cristiano Ronaldo moved a bottle of Coca-Cola out of sight during a press conference, remarking that he prefers agua, or water. Then on Tuesday, France's striker Paul Pogba did the same with a bottle of Heineken. Well, joining us now is our stocks reporter, Jun.18, who's also a massive football fan, so I know you've been following this very closely. What does, Joe, this so-called Bottlegate say about the balance of power in football?
Hey, morning. Yes, I think, well, for me, I think it sort of shows just the diminished power of UEFA and of the institutions and of the organisations around football, really. And the power is really in the hands of what we saw with the Super League. The power was in the hands of the fans. Now we see it is the players that hold all the cards in terms of the direction of sponsorship and commercial agreements. We've seen UEFA saying, almost pleading with players, do not move these bottles that we've put here because we've got these packed. But can you really tell Ronaldo that he has to sit in front of a bottle of Coca-Cola when he's this massive sugary drinks person? He's spoken about it before. He doesn't want his kids drinking sugary drinks, this kind of thing. So how can UEFA then tell him that he needs to do these kind of press conferences? The power really is in the hands of the players. In terms of the market reaction, there was a lot of reports about, a big drop in Coke's share price. That was kind of overplayed a little. The shares really moved in line with the market, but it is really a show of power in the hands of the players for me.
Joe, thank you so much. And today, England, Scotland at Wembley on the Euros. I know we'll be watching that. So more Bloomberg Surveillance next.
Inflation characteristics are out there to be filled, but is it temporary? Is it transitory? And there'll be a great debate about that.
I don't believe that we're at risk of hyperinflation.
Well, it's clear that global inflation increased quite considerably over the last couple of months, but we still see it as a temporary phenomenon.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, it's 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, 5 p.m. in Hong Kong on this Friday, June 18th. Our top stories today. Investors unwind reflation bets with U.S. tech shares rallying. The Treasury curve sees its biggest two-day flattening since March 2020. The commodities rout continues. Gold heads for its biggest weekly loss in more than a year as grains plunge the most in more than a decade. And Joe Biden makes Juneteenth into a national holiday commemorating the end of slavery in the U.S. Most government workers will get the day off, but it's a different story on Wall Street. So thank you so much for joining us. It's Friday. Happy Friday, everyone. There's quite a lot going on in the markets. Not many planned events, Kailey, but the market's definitely moving on the back of quite a lot of volatility and the reflation trade kind of once again in the doldrums.
Yeah, I'm kind of glad there aren't many planned events today, Francine, because I feel like this week has been at least a month long. Started out with a NATO summit. We had that Fed decision. So much has happened. I am exhausted and so glad that it is Friday. As for what the picture looked like in the Asian session, it was a bit mixed. You did have most stocks inching higher, but I mean inching. We were up about not even 0.1% in China. Hong Kong stocks did outperform, though. The Hang Seng up about 0.9%, while the Nikkei in Japan underperformed. And of course, that was after the BOJ decision. No surprise, they stood pat on rates. They did extend their COVID emergency program. And the Japanese yen is just fractionally stronger against the U.S. dollar on the back of that, sitting at just above that 110 level. Interestingly, the dollar is snapping a 5-day winning streak today, but it has been weighing on emerging market currencies. The MSCI EMFX index actually had its worst day yesterday since all the way back in March 2020, and we are still seeing some fractional losses this morning. As for what the picture looks like here in the U.S., it was really an unwinding of the reflation trade yesterday. It was quite dramatic, and it seems it will continue today because NASDAQ futures are outperforming before the bell, up about 0.2%. In the Treasury market, we have seen a bid coming into the longer end of the curve. Right now, the 10-year yield is down about 2 basis points, and of course, that bid into the longer end has led to a really dramatic curve flattening over the last couple of days. Right now, the spread between 5- and 30-year yields is just around 120 basis points. That is the narrowest going all the way back to November. And of course, as Francine was mentioning, the commodities decline has been really dramatic over the past several days. Gold, copper heading for their worst week in over a year. The ags, some of those ag and grains have had their worst decline yesterday since 2009. We are seeing the Bloomberg Commodity Index ticking just a bit higher today, Matt, but still it is just around its lowest in about 2 months.
I'm just looking through my terminal here. I think that yesterday was the best gain for the DXY index in over a year and the biggest drop for the Bloomberg Commodities Index in over a year. So we see that inverse correlation holding strong. Let's take a look at what's going on in Europe. Here you can see from the map that there's a bit of a mixed trade, not a lot going on in terms of French or Irish equities. We have, it looks like Switzerland there is gaining a little bit. Spain is falling the most, but there's really not a lot of movement in terms of stocks. It's not really a stocks story today. It is a day when lean hogs are falling. I looked through some European, some London traded commodities. Usually I like to say lean hogs are ripping face. That is definitely not the case today. They were the biggest loser. The pound is also down, not just against the dollar. It's down against the euro as well as the Swissy. So pound sterling losing some weight there. And then Tesco. Non-British viewers won't know this, but Brits are obsessed with the supermarkets business, supermarket stocks, supermarket finances, and Tesco came out with sales like for like, as they say, which were weaker than the market would have liked to see. Retail in general taking a little bit of a breather in the UK, and Tesco is not a beneficiary of that. More people, I guess, Francine, are going out to eat. Are you going to your gastro pub instead of buying food at Tesco?
I am. A lot of people. It's actually almost impossible to get a booking in a London restaurant at the moment. But remember, we're not completely open, so it's still restricted to 6 people.
The Admiral Codringtons. Have you been to the Admiral Cod?
I haven't. I don't know where that is. There you go. Matt, we're also getting some breaking news. The EU actually lifting some of the restrictions of the travel curbs for U.S. residents. Now, this was widely flagged, so it's not unexpected, but still some positive news out there. I understand, I could be wrong, but I understand that this is whether you're vaccinated or not. But this is certainly the latest step towards a return to normal, despite concerns over the spread of this potentially dangerous coronavirus variant, the Delta one. We'll have plenty more on travel. Now, let's also look at what else is ahead today. A Bloomberg exclusive with the Venezuela president, Nicolas Maduro. Don't miss that interview coming up in the next hour of Bloomberg Surveillance. Then European economic and finance ministers meet in Luxembourg today. On the agenda, taxes and the European recovery. They're due to give a press conference. 8 a.m. New York time. Voters go to the polls in Iran today, also to choose a successor to President Hassan Rouhani. Results expected tomorrow, with many of the moderate and reform contenders already disqualified. And finally, President Biden designated today a federal holiday in the U.S. to mark Juneteenth. That's a celebration of Black history and freedom on the anniversary that the Union Army arrived in Texas to announce all African-American slaves in the state were free. So let's get more on how corporate America is now marking Juneteenth. Joining us now is our Bloomberg Wall Street reporter, Sonali Basak. Sonali, great to have you on this. It was only Thursday that President Biden said it will be actually a holiday. So what's Wall Street doing?
Yeah, it's amazing, Francine, because it seemed like a very swift passage of the bill. However, companies have had a long time to think about this. I've been making calls for at least a month and at least a week. So, and last year, we know that many companies have thought about this as well. Some of the companies that either told employees to take a day off or at least a personal day off last year have not said something this year. So it's a measure of accountability, following up year over year. And now that it's a federal holiday, we know the issue is giving federal employees or employees more generally a day off was a point of contention for this bill, which was really sponsored since 2011. So we know dozens of companies across corporate America more broadly are thinking about this, are starting to make moves on this, but it's not hundreds. And on Wall Street, we shouldn't take for granted either that the day will be given off today or in future years. JP Morgan right now is really one of the only banks that committed to making Juneteenth a full holiday for its employees in future years. But Citigroup and others are giving others a floating holiday that employees can take off at their will. And some are not giving employees the full day off at all.
And markets obviously are open today, Sonali. Admittedly, a few of us in the newsroom when this headline crossed yesterday kind of looked at each other and asked whether or not we would be off tomorrow. Of course, we work any day the market is open. Will it be like this next year? Could the SEC decide they will recognize this holiday and there won't be trading?
Well, what's interesting, Kailey, is that the SEC will have to sign off on this, but really the exchanges are what are a big driver of this decision, and they don't make that decision alone. They make it with banks, broker-dealers, and other parts of the market. Wouldn't take it for granted either. Nobody has said that they would necessarily close the market next year. We've even had some talk about a will to not close the market, given that this holiday is sandwiched between two other closed holidays. But it is into consideration, and you could see there being a push to do this, especially for all the social reasons to be doing this.
All right, Sonali, thanks very much. Sonali Basak there reporting on Juneteenth. Federal workers have it off, but a lot of others will be working. The yield curve sharply flattened and commodities were crushed as traders continued to unwind the reflation trade after the post-FOMC shakeup. Bloomberg's Danny Berger joins us now with a look at what we're seeing in markets. Danny?
Yeah, Matt, it really has been incredible over the past 2 days. I mean, first, you get this more bearish flattening where the long end of the curve stays frozen. But yesterday, seeing those 30-year yields plunge, there are a lot of questions. Is the market starting to look at this and sniff out a hawkish policy error? If the long end of the curve is falling, is that because the economy isn't going to be able to support those short-term interest rate hikes that we're now more likely to get? Well, I would remind everyone that the day before the FOMC on Tuesday, JP Morgan puts out a survey of their clients that they are the most short treasuries since 2005. And that just really demonstrates how people were so wrongly positioned for this. So over the past few days and likely as we continue through what's likely to be a volatile day today, it is just that. It's markets coping with this, trying to digest it and figuring out how they need to now change their positioning.
We're also trying to figure out, Danny, what's going on with commodities. And of course, not all commodities are created equal. So how do you differentiate them?
Yeah, that has been part of the remarkable response to look at commodities, that they've been falling. We've seen some commodities wipe out their gains that they've seen from 2021, things like soybeans, for example. Oil has held pretty steady. And you look at other commodities that are more sensitive to the Fed, things like silver and gold that will not have a very clear path, given that people are trying to figure out what the path of growth and inflation looks like from here. But generally, it's not a great day to be a commodity bull, because not only do you have the Fed, higher rates isn't great for commodities, a stronger dollar is not great for commodities, but you also have, over the past couple of days and weeks, releasing commodity reserves, trying to control the price, and at the same time, weather is looking more fair. So all of those factors together means that we've seen a lot of commodities get hit and reverse months of action.
All right, thank you so much to Bloomberg's Danny Berger. That was a macro look at the markets. Let's take a more micro view now. Some of the stocks moving in pre-market trading here in the U.S. One of the biggest movers to the downside is Arrival, the would-be EV maker. Its shares are down about 10% after yesterday afternoon. The SEC declared its registration statement effective, so that clears the company to call back public warrants. Risk of that warrant redemption, investors don't like so much. One stock moving to the upside, though, is CureVac, and of course that was not the case yesterday. The shares plunged nearly 40% after that efficacy data from its COVID-19 vaccine showed it only worked 47% of the time. Today, though, you have one investor, Dietmar Hopp, saying he firmly believes in the company, will continue to be an investor. That may be aiding sentiment a bit, and we are seeing those shares up about 9% in early hours. One more stock moving to the upside is Adobe. It gave a profit and sales forecast for the current quarter that topped analyst estimates after the bell yesterday. As a result, that stock higher by the better part of 3% before the bell, Francine.
Yeah, we'll have plenty more to talk about. Also, we'll look at retail because it is Father's Day. So don't forget, especially if you're based here in the UK, some people, I heard in the newsroom, have forgotten. Don't forget. Coming up, we speak about the markets, reflation dwindling or the reflation trade unwinding with Nicolas May. He's PIMCO portfolio manager and sovereign credit analyst. And then a little bit later, Daniel Wiegand. He is chief executive of Lilium. This is a German company developing, building, and launching an electric personal air vehicles. They're like air taxis, and I have to say, they look really pretty cool. We'll have plenty more on that next. This is Bloomberg.
If you look around the world, central banks are going to struggle as to when this virus is behind them, because at the end of the day is the determinant here. So if you think about India, think about what they went through over the last several weeks. Think about the UK delaying the full reopening because of the variants. That's the variant question. You think about the U.S., vaccines through half the population, you can see it's pretty open, and the question is, will the variants affect us? So pay attention to the vaccine path.
Bank of America CEO Brian Moynihan speaking there with Bloomberg's David Weston. I want to take a look at what's been happening with yields, because Brian Moynihan must be noticing this. Lisa Abramowitz has been writing about this on Bloomberg Opinion. I've got a chart here which I'll walk through. Our listeners on radio, we welcome you on London, DAB, Digital, and Sirius. We have seen yields hit historic lows, and I'm not just talking about government yields or investment grade credit. This looks at double B rated European corporates, B rated and triple C rated. Junk yields have just come down after spikes at the beginning of the year, spikes during the great financial crisis, spikes after the internet bubble, to the lowest level that we've ever seen them. We're looking at triple C rated debt only giving you a 6.7% return. So it's very interesting, especially because if you see yields pop back up again, Francine, it could be dangerous to investors holding this junk.
Yeah, I mean, it is such a good chart. So let's get straight to Nicolas May, portfolio manager and sovereign credit analyst at PIMCO. Nicolas, thank you so much for joining us. We had a great chart by our Matt Miller. We're looking at some of the reflation trade actually unwinding. How much more is there to go?
Well, I think there was a hawkish move by the Fed overnight. That's no doubt. The Fed is now projecting projecting hikes in the second half of 2023, which is a hawkish move, and the Fed is moving towards managing downside risks to inflation, maybe more towards managing downside risks to growth to managing upside risks to inflation. Now, I still wouldn't overplay the message in that the statement is largely unchanged, the macro forecasts are largely unchanged, and to some extent, Powell downplayed the interest rate forecasts of the FOMC members. So actually, we should see the move as a bit of a positioning washout, but I think the reflation trade, the curve steepeners remain attractive from here, and in fact, they're possibly more attractive after the Fed induced the move in markets.
What do we need to see for rates to go up, Nicola? Because it doesn't make sense if more central banks are hiking than cutting, and even the Federal Reserve is saying it's time to start talking about tapering, that we see rates at such low levels.
So what I would say is I think the Fed obviously has moved in a hawkish direction, but our own expectations of a start of the Fed hiking cycle in the second half of 2023 is not changed, and in fact is now what the Fed is projecting. I think on tapering, our baseline is that the Fed will announce some tapering in December. It's possible it will happen a bit earlier, maybe September. But on the whole, we view a pretty patient central bank, through the cyclical horizon. We don't see, very aggressive early interest rate hikes. And at the same time, the improving macro outlook and the increased uncertainty on inflation in the medium term because of increased fiscal and monetary cooperation should lead to somewhat higher yields in the long end. And as such, I think that conviction and the positive carry, meaning that the positive yield you get from being positioned for short, long end rates and long near-term rates is such that we think the steepening of the curve remains an attractive trade.
So how do you construct a fixed income portfolio in this kind of world?
I think the reflation trade remains on. We don't have very strong views on the absolute level of interest rates. As I said, we like to have some exposure to shorter end rates, and we're underweight longer end rates. And you showed a chart about credit spreads, which arguably are very tight historically. So we do want to take risk because we see a recovery, but it's all the more important to be very selective. So instead of taking generic risk where obviously spreads are not very attractive, it's important to focus on sectors where you have conviction. And among these, I would mention housing and especially non-agency mortgages in the US. I would mention financials, cyclicals, and also risk in sectors which are going to benefit from the economic reopening after one of the deepest crises in history. So I think the name of the game is generating alpha and security and sector selection, really.
Nicola, thank you so much. Nicola Maider, portfolio manager and sovereign credit analyst at PIMCO. Now, coming up, Nicolas Maduro's message for Joe Biden is clear. He's ready to deal. Our exclusive sit-down with Venezuela's president is coming up at 6 a.m. in New York, 11 a.m. in London, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg First Word News. And the nuclear deal hangs in the balance as Iran heads to the polls today. The presidential election is expected to see a hardline conservative replace a more moderate Hassan Rouhani. Now that could complicate efforts to restore a landmark nuclear accord that has major implications for Middle Eastern security and oil markets. It's also looking more likely that the Summer Olympics will begin on time, while Japan has ended its state of emergency and boosted vaccinations to about 1 million shots a day. That, along with falling COVID-19 numbers, makes it highly likely that the Games will start on time on July 23rd. While COVID-19 infection rates in Japan have fallen by around 70% since an emergency order was imposed in Tokyo in late April. And the UK recorded the most coronavirus cases in a day since mid-February. Now, this amid warnings that the current wave, driven by the highly transmissible Delta variant, may still be weeks from peaking. More than 11,000 new infections were reported on Thursday. There's, of course, quite a lot going on with the Delta variants. And what fascinates me, Matt and Kailey, is actually, if you look at the UK, I think like 8 in 10 adults have had one dose of vaccination. And if you look at the number of cases rising, you just wonder whether the policy of waiting 12 weeks between vaccination was the right one for the UK.
That's a very good point. And I think, well, who knows about the logistics if they would have been able to do it any faster, but it doesn't look great at the moment. And it also ruins my travel plans because I love London in the summer. There's so many pubs I need to get back to. And I'm not going to travel to the UK while the Delta variant is wreaking havoc.
But I'll be traveling to Greece T-minus 2 weeks from today, not to brag or anything. But to your point, Francine, we did get data earlier this week that showed the vaccines are effective against the Delta variant. Out of the UK, if you've had 2 shots of either the AstraZeneca or Pfizer vaccine, those are more than 90% effective in protecting you. The issue is, as you say, so many people haven't had their second shot yet.
Absolutely. And Kailey really taking advantage of the breaking news this morning, which is that the EU is now open for U.S. travelers to come to Europe. Now, coming up, we'll speak more about the markets with Haefele, UBS Global Wealth Management Chief Investment Officer. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. And we just saw a beautiful shot of actually the newsroom. How cool is our newsroom here in London? For those listening on radio, it is all you need to know is that it's a very cool newsroom. Matt, we look at, there are not that many events planned for today. I mean, I know there's the Eurogroup finance ministers are meeting, but actually there's quite a lot of market events. It's quadruple witching, although there are only 3 actually witching. And then there's quite a lot going on with the reflation trade kind of going south.
Yeah, absolutely. I mean, okay, officially, I guess it's triple witching, but the guys on the floor are still going to say quadruple witching no matter how many Bloomberg News articles have triple witching in the headline for today. I will say that the newsroom there is an incredible work of art. This is another reason that I wish, you know, the UK would get the virus under control, because I want to come and work in London. I'm all alone here. It's just me and the Brandenburg Gate.
This is great. Matt Miller never missing an opportunity to remind me that I can't travel. Kailey, let's get away from Matt, saying that actually the UK, for the moment is kind of really feels a lot like an island, and look at what's going on in the markets.
Well, I also can travel, Francine, just putting that out there into the universe. And I also haven't never been to our London office, but hopefully one day my day will come, just as the day will come that Francine can travel again. As for the markets, of course, the Stock 600 yesterday snapped its 9-day record streak, ending the day lower. And today we are lower once again by about 0.1%. Here in the U.S., it is all about that reflation trade unwinding, and you are once again getting outperformance from big tech. NASDAQ 100 futures up about 0.2%. As Matt and Francine said, it is witching day. Call it quadruple, call it triple. The point is a lot of options on futures and indices on individual equities and indices are expiring, so that could mean a lot of volume and a lot of volatility. As for what's happening in the bond market, we are continuing to see that bid coming in at the longer end of the curve, and as a result, a curve flattening. Right now, the spread between 5- and 30-year yields sitting just around 120 basis points. And then I would note the dollar as well had been stronger for 5 days in a row. Today, though, it is slightly weaker. As for some stocks moving in pre-market trading, I actually want to take a look at 2 ETFs in early hours because they really do underscore this unwinding of the reflation trade. You have the Energy Select Sector Spider down by about 0.5%. The ARK Innovation ETF, though, that poster child for growth, is higher by about 0.8%. As for some other individual equities, CureVac is rebounding after a nearly 40% loss yesterday. It's up about 11%. All that concern about the COVID-19 vaccine it is trying to make being less effective. Sentiment seems to be improving today. And then a rival group sentiment going the other direction. It's down about 10% on concern about warrant redemptions, Matt.
All right, I want to just show you something that really, if you were watching Bloomberg Television or listening to Bloomberg Radio over the past few months, it might be a surprise. I'm looking at the cross-asset monthly performance going back till last June, so going back a year and looking at, of course, bonds, stocks, emerging markets, currencies, and commodities, and their performance has been pretty amazing. Commodities obviously were up in each of the preceding 3 or 4 quarters, and now they are down. The biggest losing asset of this cross-asset monthly performance chart. So it's pretty interesting, Francine, that we've seen such an about face on the commodities trade so quickly.
Yeah, it's amazing, actually, what we saw in the last 2 days. Well, joining us now is Mark Haefele, Chief Investment Officer at UBS Global Wealth Management. Mark, always a pleasure to have you on. I also really enjoy your monthly newsletters where you're always quite funny and basically say, you know, are you a predator or prey? That I guess if you're invested in the markets, what you absolutely need to do is see the next thing that will hurt your investments. What exactly is the market getting wrong right now?
Well, you know, the market is looking around at continued lockdowns. People like yourself can't get out of the office, can't get out of their country, and that's pretty depressing. And they're not focusing on some of the other things you've highlighted, like, for example, that Japan is vaccinating 1% of its population a day, that they're going to be opening up. And so what we're trying to say is let's focus on following this reflation trade and this reopening trade as it goes around the world. And that's why we're moving some of our allocations towards things like Japan.
So are there other opportunities actually in Asia? And is this because of the reopening or is this because of something else?
Well, a lot of it, we think, will be on the back of further reopening in Asia. You know, from India to Japan, I think the COVID situation is only going to improve. But you're right, there are other opportunities. For example, high yield in Asia is a way for a lot of people to try and earn some income in an environment where there isn't much in developed markets.
What do you see in terms of global central banks? We were showing a full screen yesterday illustrating there have been a lot more hikes than cuts, especially in the past few months compared to the beginning of the year. As we make this hawkish turn, what does that mean for your strategy?
Well, I think what we saw with the Fed, you know, it's a classic debate that goes on every night around the world in almost every bedroom, which is how hot is hot. You know, one policymakers, it's too hot is another's, you stole all the covers and I'm freezing. And so, you know, a lot of people were looking at the Fed's message around we're going to run the economy hot and maybe really hot because we're looking at inclusive growth, and then maybe forgot a little bit about the inflation side of the coin. And some of that balance was, I won't say reestablished, but I think the debate was opened up enough that some of these technical factors, perhaps, that you've also mentioned that are going on this week, you know, allowed some position rebalancing. So we'll see how this plays out from here. But the bottom line is a lot of the factors around the reflation trade, such as very strong monetary stimulus, continued reopening, those are all still in play. And remember, you know, we've also found out overnight that the Democrats in the United States are proposing $6 trillion in fiscal stimulus. So I think that would kind of blow the central bank debate out of the water.
Interesting. You know, the fiscal stimulus looks like it could fall off here. And this is, I was talking to David Rosenberg yesterday, and obviously he's a very famous bear. But he says that's the elephant in the room. When fiscal stimulus falls off, what are we going to do about it?
Well, look, I think you're right that it's the elephant in the room in two ways. One is, you know, we don't know if it will increase or decrease because it's politics, right? It isn't strictly finance, and so it's very unpredictable. And then whatever we get, it you know, it will trail off at some time, and if we don't get any more, that could be a factor. But I think, you know, when you look at what's going on with where bond yields are, that gives the Fed a lot of room to take their dot plot with a grain of salt, as Mr. Powell said, and allows them the room to focus a little bit more on the running hot message if they decide. So I don't think you can look at the fiscal and the monetary stimulus, completely separately, because they can balance each other out a little bit.
But of course, we've kind of reached peak stimulus, right, Mark? And we've also potentially reached peak growth. That we're peaking in the second quarter seems to be a consensus view. If that is true, why do you want to keep so much cyclical exposure?
Well, I don't necessarily know that we've reached peak growth, right? First, as we just mentioned, the fiscal stimulus picture is far from unclear, and certainly it looks like there could be more stimulus ahead. That's the first factor. Secondly, even in the United States, where you have reopened, as you know, until we get through the summer, when kids are back in school, we won't really have the full workforce participation, and therefore the full kind of level of economic activity that you might expect from even in the United States, where we've had this reopening. So I think there is some durability even in the United States. And then if you look around the world as more and more places reopen, I think there are things that can keep the global growth moving forward.
All right, so if we still have farther to run, does that mean the upside risks are greater than the downside ones right now?
Well, for I think the way that we would look at it is you do want to have something of a barbell trade on, because we're not expecting that inflation achieves some kind of escape velocity after 12 years of people predicting that it would, and then it's never achieved this runaway inflation because of all the demographic factors and other things that people see. So while we're not super excited about mega cap tech, we would look for some of the growth in some of the smaller and mid cap tech and some of the themes around health tech, fintech, green tech, things like that. So have some growth exposure on, but then also have things in the reflation trade like cyclicals, like energy, like financials, and the smaller and the mid caps, which still haven't caught up in the valuation side.
Mark, thank you so much. Mark Haefele, there, Chief Investment Officer at UBS Global Wealth Management. Now, coming up, are flying taxis the future of travel? We'll speak to Daniel Wiegand. He's the Chief Executive Officer of electric personal air vehicles company Lilium. It's a pretty amazing story. That's coming up next, and this is Bloomberg.
I don't think straight away of exit because I'm proud to be a part of these journeys to change mobility for good. You touched on Lilium, which is one of our two leading flying taxis out of Germany, and they just merged with a SPAC, and they're going to be listed then in a couple of months' time, I think, at the latest, at a 3.5 valuation at the moment is being expected. So it's exciting times, but I might just stay and stay on board because I believe in these solutions to really having the potential for vast impact. I mean, Lilium, New York to New York Airport.
Former Formula One world champion and Green Tech Festival founder Nico Rosberg speaking to me here earlier. As far as Nico has been telling us, he's an investor in Lilium. It's set up for a highly anticipated public listing on the NASDAQ. He was talking about that merger with Kell Acquisition Group, a SPAC started by former GM North American President Barry Engle. And I'm very pleased to be joined by Lilium co-founder and CEO Daniel Wiegand now to talk about this company. Daniel, Nico was talking about Newark to JFK airports. It's one of the most annoying transfers anyone has ever made in the history of airports. And it would be much better if I could just get into a flying taxi and make that journey. What exactly is a flying taxi? What are we really looking at in terms of vehicle, pilot, power? What have you got?
Yeah, hi, Matt. Thanks for having me. So actually, it's less a taxi than a vertical takeoff and landing aircraft shuttle. What we do is that we're developing an all-electric vertical takeoff and landing jet. It's a 7-seat aircraft, and we're operating these aircraft in an intercity shuttle service that provides high-speed connectivity between cities, and this enables us to achieve hours of time savings for our customers. The New York JFK route is probably one of those which I'm getting asked about by everyone who has been in New York, and we can save a lot of time on this route. But where we are also excited about is flying a bit longer trips, like 60 to 150 miles, where we can achieve hours of time saving and a high-speed connectivity without the need to build new rail tracks or roads on the ground. And this is a huge opportunity to provide high-speed connectivity for hundreds of cities and millions of people around the globe.
But hang on, so we were just looking at, it looked like maybe guys playing video games, but I'm guessing that means these are going to be drones. So they won't be flown by a pilot in the vehicle, and they will be electrically operated. Is that right?
Yes, it's all electric. However, it's going to be flown with a pilot on board. It fits into the existing aviation regulation framework. So you're going to have a pilot on board and an aircraft that is certified against the same safety standards like a commercial airliner. So the big difference and the unique advantage is that it's all electric. It's a fully sustainable new transportation system. It can take off and land vertically from a helicopter pad or a similar platform. So you need very little space and you can access into the urban areas with an airplane. And the last big advantage of our unique jet technology is that it's a closed engine, and these make lower noise emissions than propeller aircraft. And thus we can basically be market leading on the key enabler of this sector, which is low noise emissions combined with vertical takeoff and landing capabilities.
Yeah, so how far away are we from actually, or are you from, first of all, getting it certified, and then, building the infrastructure around it, but actually make it commercially viable?
So we're now about 3 years away from the certification. Lilium is a 6-year-old company. We've had about 5 years in technology development, where you've also seen the footage of the test aircraft just a couple of minutes ago. And we've learned a ton of things in testing these airplanes. We actually have a very strong partner, Ferrovial, who is also an investor in Lilium, and they are building multiple landing sites at first in Florida, where we're going to launch our service. And they are also operating this infrastructure. We are very much taking an ecosystem approach to actually launch the service.
So what's your biggest concern? Is it getting it certified that it's green, or actually safety?
Safety is your number one priority, always in aerospace. For that reason, we have hired an extremely experienced and strong aerospace leadership team, a team that has built and certified some of the biggest and most complex airliners. Besides the safety aspect, which is paramount in aerospace, I'm an engineer at heart, so I'm totally focused on getting the product right and getting the service right to have the best experience for our customers.
You aren't the only one trying to compete in this space, Daniel. What is your advantage?
There's several things that differentiate Lilium from other players in the sector. The first one is that, as I mentioned before, we're using electric jet engines, and these have two advantages. They have lower noise emissions because they are closed engines and have acoustic dampers in the ducts. And the second advantage of these engines is that they're much smaller than propellers, so we can make airplanes with more passenger capacity that still fit on the same limited landing infrastructure. And this is part of our mission, because we want to make this type of transportation system and service available to everyone. So we have to bring in more passengers on one aircraft, and we can distribute the cost of the pilot and the landing fees over more tickets.
When is your public market debut going to come, Daniel?
We're probably going to be finished with the SPAC merger sometime in August, and I'm very much looking forward to that.
Daniel, thank you so much. Don't be a stranger. Daniel Wiegand there, co-founder and chief executive officer of Lilium, with some potentially exciting projects ahead. Now, coming up on Balance of Power, Albert Bourla, he's a Pfizer chairman and chief executive officer. I'm sure they'll ask them about the UK variant, about bringing more vaccines to the developing world as well. That's at 12 p.m. in New York, 5 p.m. in London, and this is Bloomberg.
The basic principle is that debt is also connected with responsibility. And we do not want to enter into a debt union in Europe. We don't know what the economic situation in the world in 2025, 26, 27 will be, what pandemic situation we'll have then, whether we're still in a dire situation. But under normal circumstances, such a plan is always limited in time.
And that was Armin Laschet, the frontrunner to succeed Angela Merkel as Chancellor of Germany, speaking to Bloomberg's Deputy Editor-in-Chief, Radio Grigori, in a webinar. Very interesting interview there, Francine. And really, Laschet has climbed in the polls. The CDU has climbed in the polls as competitors. Opponents like the Greens have dropped.
Yeah, it's amazing, actually, what a difference there is in 2 weeks in terms of the German polls. And it was an interesting and great interview by Arreto Grigori, looking, of course, at what place Germany could take in this new Europe once Angela Merkel steps down. I think the election is, in September, right, Matt?
Yeah, absolutely. Elections in September. And Laschet, of course, heads Merkel's CDU party, the CDU-CSU bloc. They are far and away the leader in the polls. I'm not sure how well he does in terms of personality polling, but that's not the way it works here.
Yeah, so we're watching politics, but more immediately, we're also watching the markets, Kailey.
Witching Day is today, Francine. Quadruple witching is what you'll hear everyone on the street call it. Technically speaking, it's now triple witching, but still, we're just going to call it Witching Day. What this means is that you have options on individual stocks, futures on stock indexes, and options on stock indexes all expiring today. And that could result in a surge in volume and a lot more volatility than we've been seeing recently, because we haven't gotten a lot of volatility lately, Matt. So we'll see if this quarterly event that is happening today maybe changes that story.
Yeah, absolutely. Pay very close attention to markets. While you're not watching the races, it's race weekend. Here in Germany at the Sachsenring, MotoGP will come back, and maybe Marc Marquez will come back. There you see him doing a wheelie on his Repsol Honda. He has won every single race here in Germany since 2013, but he destroyed his arm in some crashes last year and has just gotten back on the bike. So it'll be interesting to see if he can be competitive or if Ducati's Jack Miller can pull it off on what is really the shortest, slowest circuit on the MotoGP
I love
calendar.
that, Matt. Yeah, you're watching MotoGP. I think the rest of the world is probably watching the Euros. And certainly here in the UK, there's a lot of football. There's a big game between Scotland and England, which you have a tartan. There you go, Matt. You are also watching the Euro. It's a full sports weekend for our Matt Miller. I'm watching the EU actually lifting travel restrictions for US residents. We also have a sad story if you live in the UK, but basically saying that Europe's beaches reopen to Americans while the British have to wait. So we'll see if there's any kind of movement on the British also being able to travel. Coming up in the next hour, a president